Hi, this is Ramesh. I wanted to talk about the big day tomorrow, right? So we have the budget 2025, which is going to be presented by Nirmala ji, maybe the seventh or eighth time. So we have to figure out, what she has in store for India and how she's going to rev up the, how she's going to rev up the markets, how she's going to rev up the economy, how she's going to rev up, you know, to turn around India, basically, right? So let's figure out, what is she going to do tomorrow. The economic survey of India data will be out tomorrow morning, and then the presentation will start by about nine o'clock. She has a lot of challenges in front of her. So the multiple challenges are basically that one is the FIIs which are fleeing the Indian capital markets, and then the market itself actually has taken a nosedive from 26,300 Nifty to around 23,300. So about 3,000 points have been shaved off primarily because of the FIS fleeing the markets. Number three is the slowing down of Indian economy because RBI and IMF and other people have estimated that Indian GDP will progress at the rate of about will grow at the rate of about 6.4% or something over the next year. So which is much lesser than the 7% typical considered for good for an emerging market, right? And then we have Trump. So as soon as he took oath for the office, he signed multiple executive orders, and then we don't know what he is going to do. So he talks. He basically talks very harsh, very. He is looking at MAGA, which is Make America great again. But in that process, actually, he is trying to do a lot of things actually which can destabilize the global markets, and no one and there is a lot of uncertainty in the market, and uncertainty in the global economy and the global markets, and so no one likes uncertainty, so we do not know exactly what is in store for us. So these are all some of the challenges, and then there is this job the unemployment rate, which is actually kind of not in a great shape. So the jobs creation is another very big thing that actually which she has to look out for. So these are some of the things, and of course, like NDA, BJP. When the last time, this is the first time actually she's going to present a budget, or maybe we can call it as a second time she's going to present a budget after they won the elections. But now the difference is that actually BJP doesn't have a clear majority, so it is actually TDP and the JDU are they are actually kind of they are supporting the NDA government. So basically, they'll have to basically try and come out with something that which is acceptable to Chandrababu Naidu and Nitish Kumar also, so, right? So that is something that they'll have to come out with. Okay, so now let's quickly just kind of do some little kind of basic things in terms of what exactly, where does the rupee come and where does the rupee go, which means that what is exactly a budget exercise, budget this thing. So it's nothing but a financial planning, where actually the finance minister is trying to figure out that where the income is going to come in for the Indian corporation, and then where the expenditure is going to go out, what sectors or what are all the different kind of areas where there is a estimated expenditure which she has planned out. Okay, and then she has to also figure out whether the expenditure is bigger than the income, and if it is so, then we are in a deficit. We will have something called a fiscal deficit, and how are we going to fund the fiscal deficit? So this is what has been the regular exercise year on year. So before the COVID, actually, we had come to somewhere about 3.5% was the fiscal deficit. That is, actually, we had reduced, we had come very close. Our income had come very close to the expenditure. But then the COVID actually put spanner into the works, and then kind of things went south. And from there on, actually, we are back into a very big this thing. So we went up to about 9.5% of the fiscal deficit is what we had in 2021. So from there onwards, actually, we have come closer to 4.5% as a fiscal deficit now. So which itself is, in a way, it is a good this thing, right? So that is number one. Number two is, where does the money come from? So in the sense that what are all the big sources of income for the Indian corporation? So the direct taxes, the indirect taxes, and then when you talk about direct taxes, it is basically the personal income tax, and then the individual income tax and the corporate taxes. Number two is the indirect tax, which is the GST, the sales tax, GST basically, and then the excise this thing and all those things. And then the third is, of course, all the income generated from the public sector, institutions that I mean, central government runs, right? Like the BHEL, the BEL, the NAL, HAL, and all of such, ISRO, and all of such kind of things. And then the fourth is, of course, India has kind of invested money, this thing, and the interest generated out of the investment. So which also includes the RBI dividend. So which basically RBI pays out for the investment that India incorporation has. The expenditure. So what are all the big ticket expenditure items? Number one is the interest payments. Interest payments are almost about 20% of the of the outlay. So for example, like last year, 24-25, the outlay was about 48.21 lakh crores. So 20% of that goes into the interest payment alone, right? That is because we have a huge debt. So the debt to GDP ratio is about 80 to 83%. So which is actually past the tipping point, because typically the 72% is considered 72% is considered as the tipping point, where the sovereign rating actually starts getting diminished if it crosses the 72%. So we are actually at about 82% or something like that. So the government has to do something, finance minister has to do something to bring it down to the acceptable 70% level. That is one. And then you have, after the interest payments, the other things are the state share of the GST, which is again some huge amount that they'll have to pay out. And then there is this subsidy. So we still have the fuel subsidy. I mean, of course, only the petrol and the diesel has been deregulated, and LPG and kerosene is still being regulated. So there is a fuel subsidy, there is a fertilizer subsidy, and then there is a food subsidy. Now, when I talk about these subsidies, it doesn't include the revdies. It includes, I mean, it is the earlier the central sponsored schemes actually, which has been there for a while. Okay, now the latest revdies probably would have added some more to this particular thing, right? And then of course you have the then after that comes all the other the central sponsored schemes, and then the central schemes as such, where the central government actually pitches in completely, and the central sponsored schemes are the central and state together when they kind of try to fund something, and they do the infrastructural spend and this and that and so many things. So these are all some of the things actually which she has to balance it out. And ultimately, when there is a fiscal deficit, there are multiple ways in which she tries to kind of like fund the fiscal deficit. The one is the RBI dividends, which come in handy. Number two, like last year, they paid out some very huge, nice dividend that they paid out. And the second thing is the monetization of the assets. So that is actually somewhere where they can get some good funding. And the third one is, in terms of, if both of these things doesn't suffice, then they'll have to go in for additional borrowing. So these are something that which they keep doing on a regular basis. Now, like we'll have to figure. So I wanted to actually look at the budget from the capital markets point of view, because at the end of the day, the capital markets basically tries to represent, or tries to kind of figure out how the Indian economy is running, right? Because after all, what is the capital market? Capital market is a collection of all the listed companies, all the big listed companies in India, which cutting across all the different sectors. And basically, it is the profitability of the companies, the market cap, and then the where do they stand in terms of what is their share price, and what is their earnings per share price, and then what is their price to earnings ratio, which is actually the the potential that the company has to grow, right? So these are all dictated, these are all derived numbers from the capital markets. So basically, whatever the whatever the budget analysis, or whatever the budget um, kind of the finance minister carries out, it reflects into the capital market. So let's find out how the capital markets are behaving today, and then what exactly she can do to rev up this, and that actually can help in figuring out whether Indian GDP can go up and whatever can this thing, right? So today, what is the big problem in the capital markets, Indian capital markets? So there are multiple things. Number one is, I mean, very clearly, it is basically that uh, the the FIIs are actually moving away from they are regularly selling. They are regularly selling, and this started from October onwards. Okay, so let's figure out what exactly, why, and all those kind of things. So they have been selling big time, and then they are going out of the Indian capital markets, and which is actually causing the markets to slip down. Now, when we try to figure out why they are selling, right, there are multiple things. One is actually the valuation of the Indian markets, the valuation of all the companies in the Indian markets that are little high. So basically, that there was a correction required, and then the FIIs actually, that is the reason they wanted to sell and they wanted to get out of this particular thing. So that, I mean, the because of the high stock valuations, they did not want to continue to park their money into the Indian markets. Number two is strengthening US dollar. So when the US dollar actually is strengthening against the rupee, so rupee is now become 87 rupees for a dollar, right? So when you have when the rupee is actually strengthening against the dollar, why would the FIIs want to kind of park their dollar in Indian rupee, where the rupee is actually devaluating? They can as well stay in the dollar itself. So that is the reason they want to get out of Indian markets, and then they want to keep their dollar as a dollar rather than put it into the rupee. Third is in terms of the US bond yield actually has gone up. It's about 4.8% now. So basically that is giving a it is much more safer, because actually when you invest in the US, I mean the 10-year treasury bonds, it is basically giving you about 4.8% returns, and then which is actually much more safer than investing in the emerging markets. So which is why actually they want to stay, they want to move there is a flight of FIIs from Indian markets into the US. Then numbers four is in terms of concern about the economic growth. There is a slowdown in the economic growth. So which is basically we were clocking at the rate of 7.5, all those kind of things, 8 and all that, and then the COVID hit, and then we went down, and then again we actually went to about 7% or something. So now again we are back to 6.4%. So somewhere about that kind of thing is what actually our GDP is. So basically it is not running very fast. So it is basically slowing down and it is decelerating. Global market uncertainty. As I said, that actually what happened is China basically is another reason why money is getting FIIs are moving towards China, because China kind of came up with a lot of the Chinese government came up with a lot of stimulus packages, and then their markets are looking much more upbeat. So basically what is happening is that the FIIs are trying to move from Indian markets over into the Chinese markets. So the DeepSeek, AI again actually it came at this point, this kind of a time, and so that is also creating a lot of issues, and showing that how China can revolutionize and can do something big, right? The short term capital gain and long term capital gain. See, until 2017, I think until 2016 or 17, there was no long term capital gains at all. So Nirmalaji actually brought in the long-term capital gain, and then so from that time onwards, actually there has been a little people have not been very happy with this thing. So basically the short-term capital gains and long-term capital gains. So these two things, the taxes on that, basically that is something that which people are not very happy with. So if they can somehow, if they can reduce that or something, but I think the last year itself she has tinkered around with the STCG and LTCG. So I'm not sure whether what she's going to do this year once again, because generally the finance ministers don't keep on tinkering with something every year. But given the fact that actually we are in for a very big problem. So, like in the 2019, okay, there was this very famously actually Nirmala Sitharaman ji had come up with something called Nirmala candle in the 2019, when she basically reduced the corporate tax from 30% to 25%. So that was welcomed by the markets, and then there was a huge bull candle which came. So people are expecting that there will be a Nirmala candle 2.0 tomorrow, and I'm sure that there will be something she'll come up with the markets, because basically if she can set right the markets will in turn actually try to set right the companies, and then the companies setting right actually will create more job opportunities and more the top line and bottom line for each and every company in every sector, and that can give a lot of employment opportunities to people, and that can create put a lot of money into the hands of people, and that can create and then they will have more spending potential, and that can start revving up the economy once again, right? So basically the corporate earnings, again actually the corporate earnings was good until 2023. Okay, the last 2 quarters, 3 quarters consistently, the 2024-25, the 3 quarters actually the corporate earnings have not been very good. So the corporate earnings have not been very good, and that is exactly the reason why our why our the GDP has started going down. Basically, the consumption has gone down. So that is the reason why we are actually having a problem. So that is one, and the next one in terms of the bond deals we talked about, the tariff fear. So yeah, so basically the Trump has talked about slapping tariffs on all the countries, China, India, emerging markets, and against Mexico, and against he already slapped some tariffs against Colombia. So he's actually, we don't know what he's really going to do. He's talking a lot of things, but we do not know what is he going to do, because if he starts doing that, then it'll have a lot of ripple effect in the global in the global markets, and then it can also impact a lot to the India, because what happens is if India, if kind of Trump starts slapping tariffs on all the products which actually gets into the US from India, and then what will happen is the US will reduce the imports from India, and that in turn will reduce the exports of India to the US. Okay, so that will mean that actually we will have lesser of our GDP again will go a little low, because we won't be having the all the companies will not be actually, their top line and their bottom lines will not be doing really well, and also we will have lesser of the dollars with us. So the lesser of the dollars coming in will again weaken the rupee, and then that again actually will create a problems in terms of our balance of payment position, because actually we again import a lot of items from outside, so for which we'll have to start paying in the US dollars, and then if we don't have much of US dollars coming in, then that is going to weaken the Indian rupee, right? So that is something that which is going to this thing. So now let's look at if we try to look at the FIIs, right? Even though the FIIs are moving away and all those, let us try and first of all get a good picture of how is the Indian market, kind of comprised of, and who controls how much of the Indian market pie. About 51% of the Indian markets, capital markets, are controlled by the promoters and the Indian government, right? And about 24% of the market is 25% of the market is controlled by the DIIs, okay, which includes the individuals, the retailers, and then the mutual funds and the insurance companies. Then the FIIs come in. So FIIs are about 16%. So they were actually about 21%, 22% at some point of time. So from there, they have gone down to about 16% today, and remaining 6-8% by the others. So now, this out of this 18%, right? Out of the 16% that whatever FIIs are controlling the market, right? Out of that, it cannot go down to zero. I mean, they cannot just take away all the money, because within the US, I mean, within the FIIs, there are certain portions. There is actually about 65 to 70 percentage of the FII component, which is actually going to be fixed, and that doesn't move at all. That doesn't change much, so they don't withdraw. So it is only the 30% actually which kind of withdraws, and which actually kind of where they move in and come out and all those things. But even then, if you look at it, FII is about, what is FII exact number is about around roughly about 80 to 83 lakh crore is what actually their investment is in the Indian markets. Because if you look at the NSE, the NSE's market cap, complete market cap, is about 438 lakh crores. So out of that, the FII component, which is about 16%, 17%, works out about 83 lakh crores. Now, last year, okay, in the last year itself, actually, they have about 3 lakh crores out of this 83 lakh crores were taken out. Now, when we look at that kind of a thing, and also in January now, about 80,000 crores has been taken out already. Okay, so when we look at all these things, we get a little bit jittery. And even the last year also, when we say that about 3 lakh crores was taken out, so is it really? I mean, like, is it really shaking up the market? But if you go down a little deeper and then look at it, they have actually shifted from the secondary market into the primary market. So they have invested, they have taken money off the table from the secondary market because of the high valuations, and then they have identified some of the IPOs where they find that these are all good parking areas, and then they have invested money over there. So in a nutshell, when you look at it, they are only about 7,000 crore is what was the FII pull out in the last year, in the 2024. From, I'm talking from January to December, right? So it is not that bad. And again, when you look at the right from 2010 onwards, when you start looking at it, right? So the FIIs actually move out, and then they again come back in, they move out, come back in, and all those things. So it's not a really very bad. We are not in a very very really kind of murky this thing that there is going to be some huge problem for the Indian capital market. So they will come back. Only thing is, we'll have to make them come back, and that's where actually the Nirmala ji has to do something. RBI has already stepped in, so they have actually infused about 1.5 lakh crore of money into the supply. So they basically kind of liquidity. They try to work out some kind of a liquidity measures by making money available easily. So it is up to so that is the monetary policy. Now the fiscal policy is where, which is controlled by the government, by the finance minister. So she has to figure out what else she can do. So maybe a reduction of some more corporate tax, and then mainly actually she has to do a lot of infrastructural spend. So basically what happened was, in the last year, I think actually whatever was the estimate, so from January to, I mean, because last year was a what do you call the election year. So there wasn't much of infrastructural spend which happened last year. So that will have to gear up once again, and there has to be a lot of infrastructural spend, which will lead into a lot of job creations. And then there are about 2 lakh crore people actually who come out every year. So they sorry 2 crore people who become 21 years of age, every year. So they have to be provided jobs. So the jobs is something that actually which will become a very big mantra for the finance minister. And then so infrastructural spend, and then she has to relook at the STCG and LTCG, what she can do and how she can arrest the FIIs. And then she also has to rework something in terms of the income tax slabs also, because apparently actually that like if you put money into the hands of people, then I mean, even if the direct taxes goes down, the indirect taxes will start going up. So that is how, because when you put money into the hands of people, then they actually can spend on different things, and once they start spending on different things, then the indirect taxes, the economy starts going up, right? So basically that nothing, it's not something that when you reduce the tax, the kind of direct taxes, income tax slabs, when you rework on that, and then when you reduce the income coming in, so that doesn't mean that there is a reduction of income for the Indian corporation. So basically whatever goes down in the direct taxes will come back to you from in form of the indirect taxes, right? So those are all the kind of things that actually which I thought that she'll have to this thing, and Trump is something that she will have to really keep in mind. So there has to be something which she has to work on, whatever Trump is going to destabilize the economy. So that's my little this thing that I wanted to share. Thanks for listening in.